Hi, everybody. Thank you for joining us and welcome back. This is season 2, podcast number 1. It's crazy that we're in season 2 already. I am Jennifer Phillips Russo. I'm here with Kevin Martin, and we are specialists on the Lake Erie Regional Grape Program, a Penn State and Cornell collaboration. I'm going to let Kevin talk to you today, introduce him because he's going to talk a little bit about wine grape prices.
So we had a chance to look at some of the historical trends in wine grape prices. We thought we'd kick off season 2 with this kind of information. We've been talking a lot about Concord harvest. I think most of the vinifera production and even the hybrid production was harvested on time this year or close to on time. And Concord's just went on forever because of just tank space issues and the size of the harvest. So we've been talking a lot about Concords for weeks and weeks. We've taken a couple weeks hiatus from the podcast, so it's good to be back, and we've got a chance to talk about what's going on with vinifera pricing. This was sort of inspired by not just a talk I gave, but I gave a talk at a new grower conference in State College a couple of weeks ago, and there was another business talk from Virginia. Their prices for vinifera were significantly higher than ours. I know I said I wasn't going to talk about Concords, but this is under the context, and I think this changes sort of the context of what's happening in the industry is changed because the price of Concord is doing quite well. So I would expect that we see trends in growth in the vinifera area slow because of that. So basically what we see when we look at long-term prices is prices in the Finger Lakes, in the Hudson Valley, and in the Lake Erie region. I'm trying to exclude a Long Island here. They tend to be lower than other northeastern states and regions. And that trend, that's a long-term trend. The other trend is growth has been slower in prices as well. So many of those prices have been very flat over the last 10 years.
Well, I have a question. You said in other Northeast regions, are you talking about like Virginia and Georgia and, oh, really, West Virginia, all those areas?
I can't say that I have a lot of price data out of West Virginia, but yes, in general. What I would say is that we grow grapes more efficiently here, so people are willing to grow them for less. That's a little bit more problematic in vinifera because that efficiency can be lost more quickly than it can in other varieties. So we have machine harvesting, we have concentration of acreage and growers that are large. We have, in most cases, except for the Hudson Valley, lower costs of land. I know the Finger Lakes is expensive, but you compare it to some of these other regions, and sometimes there's an advantage even in the Finger Lakes. We have an industry with infrastructure. All of that makes us more efficient, so our prices are going to be lower. But I think it's important to keep that in mind, that our prices are going to be lower, because if you are a grower that wants to grow on 3 acres and do something special, you really have to carve out that niche before you start. If you are in a different region, that's sort of who you're competing against. There isn't really anybody else. There are a few exceptions to that rule, but for the most part, that's what growers look like. In our region, they look large, and in other regions, they look smaller. And this is all relative, of course. But so what that means is prices have been fairly flat. And one of the things I did want to discuss, because this is a little counterintuitive, is that we don't see prices for quality increasing. So when we look at slow growth in prices, what we're seeing for the most part, and it's a little hard to see through the noise because you can see fairly big price spikes for a year and then they go away, or price drops for a year and then they go away. And that's just in individual varieties in vinifera. It has not happened across varieties in the last 10 years, but you might see one variety spike for a year. Now, but discounting those 1-year spikes, we are seeing a trend in higher prices for vinifera where quality is not spelled out. So in New York, you have to announce your price to Department of Ag and Markets. You can also volunteer to give that to the Finger Lakes Regional Grape Program, which we appreciate and they appreciate. And when quality is not enumerated, the payments have grown slowly. Say typically from $1,100 a ton to $1,500 a ton, with the exception of Pinot Noir, which was at $1,700 and eventually got to $1,800 a ton, maybe $1,900. So that's where the trends are pointing. So Pinot Noir in 2012 was a class ahead of everybody else in price. And now that gap has closed considerably, but it is still on the higher end of the varieties I looked at. And, anywhere from $1,200 to $1,900 a ton is where we were at most recently. And that's for where quality is not enumerated. Where quality is enumerated, whether it's high bricks, or sometimes they just say high quality, or sometimes they say, a specific block. Where it is enumerated, prices in 2012 were somewhere between $1,300 and $1,900, depending on the variety. So that's an average for each variety. That's where the range was. And now they're between $1,300 and $2,000 a ton. The other important takeaway there is Department of Ag and Markets never deletes a variety. So they consider Cabernet a variety. They consider premium Cabernet from Jennifer Philip Russo's vineyard a variety, and they never delete that. So if somebody reports that price in 2012, it shows up in 2017 as nobody reported a price for the variety Jennifer Phillips Russo Concord, which makes a mess out of the data, but is really interesting because what you can see is these enumerated quality standards have no staying power. They don't last. So if somebody pays you a premium for high bricks, even if it's as generic as high bricks, it goes away after 2, 3, or 4 years. And maybe another form of quality comes back, or maybe it doesn't. We see the number of quality standards ebb and flow. And I'll be honest, a lot of what I see when I see premium quality, when I see that enumerated, it's actually because there's a surplus of that variety. So it's not that they're paying a premium dollar amount for a particular variety. It's that they are selecting to pay what they are used to paying, but only for premium. And then the surplus goes away. So when you see this ag and markets data or Finger Lakes data, the one thing that's not included in this average is zero. So if you didn't find a market, if you didn't receive a price, if you don't have a contract, you got nothing. And that's not in an announced price. And we also see that in terms of extremes. So there's sometimes a enumerated standard for poor quality, like bulk, not contracted. And so we do see a wider range of prices on the lower end. That floor is very low. It's zero, but it's also, a lot of times there's something in the range of $600 to $800 a ton when there is a surplus. So a premium that's enumerated can command a higher price, but it's really not going to be a premium price compared to good prices on just regular Riesling or regular Gewürztraminer.
There's nothing particular about Riesling and Gewürztraminer.
Right. Well, I think, and we had a nice discussion with some Finger Lakes growers about why that might be. And I think it's important to understand why it might be to sort of manage your own vineyard. And I think it's because what we're seeing is the reliance on relationships and building relationships directly with wineries. So nobody's going to pay you a premium for your Riesling just because the bricks is higher. They're looking for something that's a lot less measurable. They're looking for a relationship with a grower that they can trust. And if the weather is the weather, oh well, they'll take that risk. But if they know they're working with a grower that is doing something better than someone else, that's that's where the market is more stable and where prices are higher, which is why you're seeing prices of generic Riesling or Gewurz, it doesn't matter what it is, why we're seeing them rise, because they're no longer reporting in certain instances those quality parameters. They're just not buying from people where they would be concerned about quality parameters. And this obviously doesn't apply to the largest wineries, but this is what has happened in a lot of the smaller wineries. It's the trend that people are observing is they have begun to pick and choose who they buy from.
So prices are still trending up a little bit, just not as.
Yeah. So two things. Prices are very slowly trending up. But a lot of that is movement from premium to what is probably premium, but we can't identify as premium. And some of the premium that is around, I sort of tend to discount. So if premium includes, a requirement of hand harvesting, particularly a variety that's not typically hand harvested, if they're paying a hefty premium for that, most of that cost is borne by the grower. It's not that the grower shouldn't do that. This may be opening up a profitable marketing channel for them, and that's great. But just because they pay an extra $500 a ton doesn't mean the grower is actually receiving any net premium there. So you have to take some of those with a bit of a grain of salt. And the other thing they're doing is they're directly paying for some practices. So that hides some of the cost as well. I'll pay you $1,000, $1,500 for your Riesling, and I'll also pay you to harvest it. And that doesn't get captured in the announced price. So they're actually paying the harvest crew. So it's a little more complicated, and I think the market is maturing and getting more complicated, which is why you're seeing the evolution in this data. But I think that's important to keep in mind. Nobody's going to pay. I think the long-term trend is nobody's going to pay for what I would call generic premium, something that's easy to measure, something that you can do and market in the way that you do with Concord grapes. You increase the bricks, you get more money. And that, I think, is a trend in our region for vinifera that is going away. Now, if you're still with us and you want to hear more, please feel free to stick around. But I did want to talk a little bit about the price elasticity of grapes and how, looking at this data, it becomes clear to me that vinifera is very similar to Concord in some ways. So we export enough vinifera so that a little bit of this price looks like it's behaving like a commodity, not a value-added product. So when I look at vinifera in the Lake Erie region, and probably Long Island as well, it's a value-added product. We have very few vinifera growers that don't have a winery. They're selling this stuff to themselves, and then they're adding value to it, and they're selling it at retail. So the price in those areas, it's just a little bit fake. If you're just selling to yourself. Now you get to the Finger Lakes and you have growers growing and wineries making wine. And it's very complicated. I mean, lots of wineries are also growing grapes, but it's not as simple as it is in the Lake Erie region, where it's very hard to find somebody growing 10, 15 acres of vinifera and they don't have a winery. There's probably 2 guys out there that are in that boat. There are not very many. So that seems to me, that and the fact that we export to other regions, either bulk juice or bulk wine, or even grapes, part of the price is behaving like a commodity. So what that means is the price isn't great, and the growers are not necessarily naming the price. And there are instances and exceptions to that, but I think if you're going to get involved in a business or grow a business, you should know how that pricing structure is evolving over time. And that's, I think, the trend a little bit.
Hence the reason for the talk as well, right? It was new growers, need to inform them.
So there was a talk with Finger Lakes growers, and that's really what this was focused on. We were really talking about establishment. I was talking about establishment and managing capital in State College. There was another grower that was giving a talk more like this, or extension agent, and he was actually from Virginia, which is where I noticed a sharp sharp difference in prices.
Wow.
So
How sharp was that difference? Enough to cut you?
enough to what?
Enough
Oh, yeah. Yeah, I mean, 20, 25, 30%.
Wow.
Mm-hmm. Not as dramatic as, say, like growing hybrids in Minnesota. I mean, there we see 200-300% differences in prices. It would technically, in any of these cases, make sense, even though it doesn't make sense, but it would make sense to truck raw fruit to these markets from our region. But of course, there's a huge interest in local products and local stories. So those markets don't actually exist for the most part. So back to price elasticity, why wouldn't, one of the things that I think frustrates growers and wineries when they try to meet about price, or when price isn't what they want it to be, is price is not as elastic as they want it to be. And it's not as elastic as other goods in the market. So it doesn't perform the way they might expect that it would perform. So a good way to illustrate this on the demand side, so wineries demand grapes. Why wouldn't a winery buy $500 Riesling? So they don't have the ability potentially to contain $500 Riesling. If the tanks are full, the tanks are full. Even if they do have containment, do they have the ability to scale up, to process it, to market it when they know in 2 years it's going to be $2,000 a ton anyway? And even if they have that, do they know they can sell it? Because consumers don't show a lot of response to price elasticity as well. You can raise the price of wine. If you cut $20 wine to 10, I'm not going to go buy twice as many cases. I mean, at some point you can only drink so much. And I know somebody might question that logic, but I promise in the market, it's true.
You refer that somebody as me, Kevin?
No, just generically. What's in the bottle? So, and why would a winery pay $3,500 a ton for Riesling? If, we're used to paying $2,000, we have some winter injury. Why would a winery pay $3,500 a ton?
Right.
Well, it is extremely important to have something to offer their market base. The capital's already invested. The grapes are the cheap part of wine. At $3,500 a ton, it's another $3 a bottle. If they need that Riesling, they can afford to pay a lot for it. So what this means is when grapes are in short supply, the wineries can pay a lot more. And when they're not willing to. And on the other side of that, we have the price elasticity of demand. So why wouldn't growers grow more Riesling for $3,500? And the answer is, for the most part, they can't. So the reason the price looks like that is because we have a perennial crop, and it is what it is. It's hanging on the vine, and that's when the price goes up, when you can't get more. And even if it were to last over a longer time scale, we wouldn't necessarily see changes in production right away, because it's going to take so long for that to get to market. And we will see price response eventually once yields increase. So the answer is growers will respond very dramatically to prices on the upside, because they will plant more. But the problem is it's on a different time scale. So you don't see the price elasticity responding. You can't create more grapes with money like you can other goods. On the other side, why would a grower grow Riesling for $500? And the answer is, it's a perennial crop. They're not going to respond to low prices. They're going to continue to produce for the most part, because they've already invested the capital. They already have the Riesling. Obviously, on a short time scale, this is very obvious, but it needs to be reinforced that this happens on a longer time scale as well. If prices are low for 2 or 3 years, they are already invested, so they will continue to wait for prices to rise. Now, there are extremes like $15 a ton. Obviously, you might see a lot of exodus very quickly. Growers who have marginal sites or are willing to, plant something else and have other opportunities might change more quickly. But in general, this is what we see. We do not see a lot of activity in impacting yield on the low end when prices fall.
That's a
So
lot.
yeah, it's a lot. That's why I invited people to leave if they didn't want to. Um, so now I've talked a lot about trends and how the price hasn't moved a lot. And I think it is important to sort of indicate that there are exceptions to that rule. And it's just all of those exceptions are very short term. So we had some winter injury, we had some oversupply conditions, and also like winter injury would be the opposite, where there wasn't enough supply, and you would see particular spikes in price or drops in price or strange things happening, like lots of quality standards being added because growers were filtering out, or wineries were filtering out the surplus by demanding quality parameters be met, and when they weren't, they would not accept that fruit at all. So those there were price spikes that lasted pretty much no more than 2 years. Winter injury was probably the longest. Most things were 1 year. General trends are different from variety to variety, but also not surprising and very logical. Like Pinot Noir experienced a lot of growth in the earlier part of this millennial, so it's experiencing less growth now.
Question. I'm sorry to interrupt you. I have been driving around the belt and noticing that there's a lot of fruit left on some of these vines, and hearing that they didn't have a market because there was such a big crop out there. So what do you anticipate happening next year if it's a supply and demand thing?
So a lot of the surplus that you'll see, I would guess, it relates specifically to containment issues. So what we're going to see in Concords is the tanks were very, very, very full, and processors were willing to fill them more full than they usually are, if that makes any sense. Whether that meant trucking them to different facilities or concentrating to a higher degree and extending harvest out. And so that was all, and this happened in the cash market. Of course, it happened with cooperatives because they don't have a choice, but in the cash market, this happened. So there's more to sell, and they're betting that they can sell it. And I think the wine industry is in a similar position. So if they're betting wrong, there could certainly be a problem. But I'm guessing what happened is tanks got full, and even if they wanted to buy something, they couldn't.
No room for it.
I have you seen any vinifera hanging around? Okay.
Well, yes, I was seeing some yesterday. Yeah.
Okay. I guess that surprises me a little bit more because usually space is made for vinifera in the tanks.
Well, it was actually like you were talking about earlier, growing for their own winery type thing, and just
Okay.
they put the time and effort into that when there's others that really need to come off the vine because of just the season that it was.
Mm-hmm. But the hybrid market was definitely very mixed this year for that very reason. Is, if you have a hybrid that's less in demand and there's only so much tank space, you may be competing with Cabernet or Riesling or a more desirable hybrid probably is the most likely outcome. So if you have a less desirable hybrid, that was a problem that led to, I think, the movement of hybrids around. I don't know if too much that wasn't harvested, but certainly was allocated to different markets and received lower prices. And I haven't gotten a chance to really look in detail at what hybrid prices have done, but the larger wineries and processors have not raised hybrid prices, and some of the older varieties, those prices have actually fallen because they've been replaced by other varieties. So I would be willing to bet you're going to see hybrid prices and alternative natives, say like maybe Delaware, although Delaware might actually be the exception and up with another variety, but Catawba, Elvira, you're going to see price declines in those areas over the last 5 to 10 years for the most part.
Do you think that is a downward trend to continue, or do you think it is sort of like the hops industry when something is really fashionable at the time, the workhorse just sort of stays the same or maybe even drops a little, but they'll always come back?
Yeah, I have no idea. There was definitely a trend there with certain products that led to an increase in demand, but none of those natives, for the most part, were widely planted to expand. Other varieties were planted,
Right.
which could be more desirable and replace the natives if the trend doesn't come back. So now you've got, say, Elvira competing with Aurora, which it always did, but now there's more Aurora. So I'm not sure what that's going to look like going forward.
Got it.
They're easy to grow and they're a perennial crop. So they typically tend to always survive because they can hang on with very little care. Whereas something even like Aurora takes more care. So when prices start to swing, then those varieties lose out because they take more care. They're not going to cling to production quite as long as I like to think of natives as truly perennial crops. Like the vineyards last 100 years with some renewal work, and you start to see some of that renewal work be fairly intensive in more tender varieties is all. So when prices are bad, you're more likely to see more sensitive varieties be removed a little bit faster, even though it's technically a perennial crop too.
Right.
But yeah, it's not terrible news. It's just I don't think you're going to see a lot of growth in this industry, which is usually thought of to be more profitable and exciting, and younger and newer. And I don't want to take away from the excitement that people have about wine because it is exciting, and but it is going to be a period of slower growth, particularly on the ag side. On the winery side, this doesn't really speak to any of that.
Right.
That can look a lot different. So
All right.
we'll see where wineries go, but this is really more about grape growers growing grapes. So
I'm glad you brought that to our attention. And we're going to do another one on that. Like the talk you gave was not recorded, correct? So maybe we'll see that talk again so we can record it.
Yeah. So one of these talks was in conjunction with the Wine and Grape Foundation, and they are doing some things to help make those connections that we were talking about. How maybe it's not about premium grapes, it's about premium growers and building those relationships. So giving growers tools to make sure that wineries know who they are and what they're about. And so this is the foundation of that, and we'll be around to discuss that some more in January.
Good. I'm glad to hear it.
All right. We will see you all next week for episode 2. I assume at some point in the future, we don't have a definitive plan yet, but we'll probably be taking a Hollywood.
I like Hollywood.
Yeah, sure. A holiday hiatus. But in the meantime, we're going to produce a few of these podcasts for season 2 before the end of the year. And thank you all for joining us. We've had some great suggestions for topics. So we do have a couple of ideas in the works for future podcasts, but we'll always take more for sure. It's going to be a long, cold winter. And we definitely don't want to, run out of content. And in a pinch, sometimes we are short on ideas, even though we know that there's always something to learn. So thanks again for joining us, and we'll see you next week.
Have a great week.